For most of human history, financial power moved from empire to empire like a wandering crown. Ancient Babylon dominated trade. Athens controlled the Mediterranean. Rome built a commercial empire. Venice thrived through merchant banking. And Amsterdam became the financial nerve center of the 1600s. But today, one city stands above them all. A city that hosts more international banks than any place on earth. A city where about 40% of all global foreign exchange trading happens every day. A city whose financial district is older than many modern countries. That city is London. But how did London, a foggy island capital, become the world's banking headquarters? Why wasn't it Paris, New York, or Amsterdam? What combination of history, innovation, empire, law, and timing transformed Britain from a small medieval kingdom into the command center of global finance? This is the story of how London conquered the world, not through armies or monarchs, but through money. And before we begin, if you're new here, make sure to subscribe to British Economic Archives, where we uncover the financial history they never teach in school. London's rise as a financial centre began long before Britain had an empire. It started in the medieval period when foreign merchants began pouring into the city with silver, spices, wine, wool, and cloth. In the 1100s and 1200s, Italian bankers from Lombardy brought sophisticated money-changing systems and credit instruments far beyond anything in England at the time. They set up their business along a narrow street in the City of London. Over time, the street became known as Lombard Street, named after them. Even today, 800 years later, Lombard Street remains one of London's financial arteries. It is astonishing that a street created by Italian merchants in the Middle Ages is still part of the world's banking core. This early arrival of foreign capital gave London a head start. By the 1300s, the city already had a structure that resembled a modern marketplace, a common currency in the pound sterling, a busy port, merchant guilds, and courts that enforced commercial contracts. But at this stage, London was still not the world's banking capital. For that to happen, the English state itself needed to evolve. In the centuries that followed, something significant happened. English monarchs began relying on merchants for money. By the 1500s, England wanted to expand its navy, defend its coastline, and engage in overseas exploration. But all of this required serious financing. Taxation in medieval England was slow and unreliable, and the crown needed cash fast. To fill the gap, kings turned to goldsmiths and merchant lenders. Lending to the king was risky but profitable. This growing relationship between the monarchy and London's financial class drew wealth into the city and helped merchants rise in influence. But a major crisis changed everything: the English Civil War. When war broke out in 1642, King Charles I was desperate for funds. London's merchants, frustrated by the king's previous abuses, refused to lend. In a desperate move, Charles attempted to seize the deposits stored in the vaults of London's goldsmiths. This destroyed the last bit of trust between the crown and the city. Yet ironically, this crisis created something extraordinary: a private banking system independent from royal control. Goldsmiths began issuing their own receipts and promissory notes, which soon functioned like early banknotes. London's financial community realized they could operate without relying on a monarch at all. Only a few decades later came the most important development in London's financial history. In 1694, after years of war with France, the English government was broke. Parliament approved a brilliant idea. Wealthy merchants would lend money to the government, and in return they would be allowed to create a central bank. That institution became the Bank of England. It issued the first widely trusted banknotes in British history and stabilized the financial system. For the first time, Britain had something no other major European power had: a central bank tied not to a monarch, but to Parliament. This created stability and credibility. Investors across Europe now trusted British government debt because it was backed by a strong political system rather than the whims of a king. This single innovation gave London the foundation it needed to eventually dominate global finance. During the 1700s and 1800s, as the British Empire expanded, London grew at a breathtaking pace. The empire created enormous flows of goods, capital, and information. British ships connected India, the Caribbean, North America, Africa, and Australia. London became the clearinghouse for global trade. Meanwhile, the Industrial Revolution transformed Britain into the world's workshop. Railways needed capital, factories needed loans, mines needed investment, and global trade needed credit. London had all of it. British investors financed railways in Argentina, mines in South Africa, cotton plantations in India, and ports in China. By the late 1800s, it is estimated that roughly 60% of all global trade was financed through London's financial markets. Sterling became the world's dominant currency, almost a century before the US dollar would rise. British commercial law became the gold standard for international business. The City of London's reputation for fairness and stability gave it a powerful advantage. In a century filled with revolutions, collapsing empires, and political instability, investors trusted London. The London Stock Exchange, founded in 1801, helped transform Britain into the world's largest capital exporter. London wasn't just a wealthy city, it was the world's financial engine. But the 20th century brought dramatic upheaval. World War I drained Britain's finances and weakened sterling. The United States emerged as a major creditor nation. After World War II, America became the new global superpower, and the dollar replaced sterling as the world's reserve currency. Britain's empire dissolved, and many assumed London would fade into the background. But instead, something unexpected happened. London reinvented itself. In the 1950s, the United States introduced regulations limiting how much American banks could lend and restricting interest rates. So bankers looked for a loophole, and they found it in London. European countries and even the Soviet Union began depositing US dollars in London banks to avoid American oversight. These dollar deposits became known as euro. What followed was the birth of the eurodollar market, one of the most important financial innovations of the 20th century. London suddenly controlled a giant pool of offshore dollars that the United States could not regulate. This allowed London banks to lend freely, operate globally, and attract massive corporate funding. By the 1960s and 1970s, London was once again the financial center of the world, not because of empire, but because of smart regulation, openness, and global trust. In the 1980s, a second major transformation occurred. Prime Minister Margaret Thatcher deregulated the financial sector in a series of reforms known as the Big Bang. Trading rules were modernized. Electronic markets replaced old systems, and foreign banks were allowed to operate freely. These changes turbocharged London's financial industry. The City of London attracted American, Japanese, Swiss, and European banks. London became the global hub for derivatives, trading, foreign exchange, insurance, and international law. The English language, common law system, geographic position, and open economy all contributed to its dominance. London was perfectly located between Asian and American time zones. When Tokyo closes, London opens. When London closes, New York opens. For global markets, London became the bridge connecting the entire financial world. Today, London handles trillions of pounds in daily transactions. It processes more US dollar trading than even New York. It is home to more foreign banks than any other city, and its financial services sector contributes over 10% of the United Kingdom's GDP. London's rise was not the result of a single moment, but a 1,000-year evolution. It began with medieval merchants, expanded through empire, stabilized under the Bank of England, reinvented itself through the Eurodollar market, and accelerated again during the Big Bang reforms. Every time the world economy changed, London adapted. Every time another financial center rose, London found a new advantage. Today, despite global competition, London remains one of the world's 3 dominant financial capitals, alongside New York and Hong Kong. And unlike many rivals, London's financial district sits on centuries of experience, deep legal foundations, global networks, and a reputation for trust. If you enjoyed this deep dive into the financial history behind London's global power, make sure to like the video, share it with someone interested in economics, and subscribe to British Economic Archives. New episodes are on the way, and each one uncovers the hidden stories behind the money systems that shaped our world. Thanks for watching, and I'll see you in the next one.